Good morning, I'm Chris Beecher. Welcome to IG's morning market headlines for Friday the 24th of May. And the FTSE having a slightly choppy day trying to establish a clear direction. It was around 20 points high in the early part of the session, but as we've moved towards the middle of the day, it has now once again slipped lower, down 40 points, down at 66.56 really. The bears taking advantage of further nervousness among investors to push markets lower at the moment. It really is a case of a calm after the storm, after that 2% decline for the FTSE yesterday. US markets only slightly lower by the end of the day really, showing perhaps a more sanguine approach to the current situation than the European and Japanese cousins. The Nikkei finished up 1% after a rather choppy session over there, which was something of a surprise for investors, but nonetheless I think the overall atmosphere remains fundamentally cautious. Rather lacking in corporate news this morning, we just really have Smith's Group, its third quarter update, released just saying it will be in line with expectations and meeting targets for the full year. Their first half update was fairly strong, with good growth in emerging markets such as Latin America and China. So expecting more of the same when we see the full results later in the year. Shares up around 0.8% this morning. IG clients around 86% long so far. However, with bank holidays in the US and the UK on Monday, we are seeing fairly quiet trading volumes. Markets really not moving too much. Investors unwilling to be caught out ahead of that long weekend. In terms of economic news, it also was a quiet day. We had the German IFO Business Climate Index actually rising for the first time in a couple of months, showing that German businesses are slightly more confident about the months ahead, which at least is a welcome relief from the unrelenting barrage of bad Eurozone data. However, we've also had reassurances last night from the Fed, James Bullard, President of St. Louis Fed, saying that investors shouldn't worry too much about a tapering of QE anytime soon. It's fairly likelihood that we wouldn't see any change in major size in terms of Fed purchases over the next few months. That will, I think, help to calm nerves over the weekend. Looking ahead to the rest of the day, it's still a fairly quiet day. We have US durable goods for April expected to rebound slightly after slumping in March. And I expect the S&P 500 to begin the day around 4 points lower at 1646.